In a more recent video that I did about Bitcoin and the possibility of it hitting $50,000, I had talked about that people were looking at it very optimistically. We had a pullback that did happen yesterday. We've actually got a little bit more of a drop that's happened today, but we're going to be diving into this article here, and I'll be sharing my thoughts as well, in which this does talk about the fact that traders are still keeping an eye on that $50,000 price level. So this is an article from Cointelegraph. You can find the link down in the description below. I am on TikTok. I would love it and appreciate it if you guys check me out. You can find me at Crypto Atlas on TikTok, and I have another one that is called AI.crossover, where I'm doing fun AI artwork. You can find the link to that down in the description below. With that being said, let's go ahead and get started. Bitcoin derivatives data points to traders' $50,000 Bitcoin price target. Bitcoin bulls' expectations of $50,000 and higher remain feasible, according to Bitcoin futures and options markets. Bitcoin price continues to trade below its 2023 high, a sign that investors may have underestimated the strength of the $44,000 resistance. Even as Bitcoin price trades below $42,000, it doesn't necessarily mean that reaching $50,000 and beyond is no longer possible. In fact, quite the opposite seems more likely to occur. Looking at Bitcoin derivatives metrics, it is clear that traders ignored the 6.9% drop and remained optimistic. However, is this optimism enough to justify further gains? The $127 million liquidation of leveraged long Bitcoin futures on December 11th may seem significant in absolute terms, but it represents less than 1% of the total open interest, the value of all outstanding contracts. Nevertheless, it's undeniable that the liquidation engine triggered a 7% correction in less than 20 minutes. Bitcoin's crash was accelerated by derivatives, at least in the short term. On one hand, one could argue that derivatives markets played a crucial role in the recent negative price movement. However, this analysis overlooks the fact that after hitting a low of $40,200 on December 11th, Bitcoin's price increased by 4.2% in the following 6 trading hours. In essence, the impact of forceful liquidation orders had dissipated long ago, disproving the notion of a crash solely driven by futures markets. To determine if Bitcoin whales and market makers are still bullish, traders should examine Bitcoin futures premium, also known as the basis rate. Professional traders prefer monthly contracts due to their fixed funding rate. In neutral markets, these instruments trade at a premium of 5% to 10% to account for their extended settlement periods. Data reveals that the Bitcoin futures premium barely fluctuated despite the 9% intraday price drop on December 11th, as it remained above the 10% neutral to bullish threshold throughout. If there had been significant excess demand for shorts, the metric would have at least dropped into the neutral 5% to 10% range. Traders should also analyze options markets to gauge whether the recent correction has dampened investor optimism. The 25% delta skew is a telling indicator when arbitrage desks and market makers charge excessively for upside or downside protection. If traders expect a Bitcoin price drop, the skew metric will rise above 7%, and periods of excitement tend to result in a negative 7% skew. As shown above, the Bitcoin option skew has been neutral since December 5th, indicating a balanced cost for both call, buy, and put sell options. It's not as optimistic as the prior couple of weeks when put options traded at a 10% discount, but at least shows resilience after the 6.1% correction since December 10th. Retail traders remain neutral to bullish despite Bitcoin's fluctuations. After covering the two most relevant indicators for institutional flow, one should analyze whether retail traders using leverage influence the price action. Perpetual contracts, also known as inverse swaps, include an embedded rate that is typically recalculated every 8 hours. A positive funding rate indicates increased demand for leverage among long positions. Notice that data reveals a modest increase between December 8th and December 10th to 0.045%, equivalent to 0.9% per week, which is neither significant nor burdensome for most traders to maintain their positions. Such data is quite healthy considering that Bitcoin's price has surged by 52% since October. It suggests the excess of Let's try that again. It suggests that excessive retail leverage longs didn't drive the rally and subsequent liquidations. Whatever caused the rally to $44,700 and its subsequent correction to the current $41,300 appears to be primarily driven by the spot market. This doesn't necessarily mean that the bottom is in, but it significantly reduces the odds of cascading liquidations due to excessive optimism tied to the expectation of a spot exchange traded fund ETF approval. In essence, this is good news for Bitcoin bulls, as derivatives indicate that positive momentum hasn't faded despite the price correction. So take a look here at the price chart. As of the time we're recording this video, we have a red candle, but you guys can see there is that tall wick up top. We also have a little bit of a wick going down here on the bottom. So overall, with the movement, we're pretty flat on the day. Ideally, I would love to see this close out a little bit in the red, just because, again, psychologically, when you look at these things, having consecutive days has an impact on how people perceive what is more likely to happen next. And so after having 5 days of green candles, you assume the chances of it being a red candle the next day only goes up every day that you see green, right? So having 2 days of red candles suggesting that, okay, are we going to see another red candle? The probability starts to go down a little bit more. And having a nice green candle after this huge drop that took place on December 11th, I think would be refreshing. And it would suggest that this was expected, this is something that's natural, and that we can have a further continuation up. Now, I do also want to point out to you guys that when we look at the 50 and the 200 moving average here, this green line, we can see that it's starting to flatten out a little bit. So hopefully the Bitcoin price does continue to rally up, because the fear is that if we go sideways here for too long, we'll start to see these starting to converge between the 50 and the 200 moving average, which would start to lead to fears that we could see another extensive bear market. And keep in mind that we do have the halving of Bitcoin next year. We also have the Bitcoin ETFs that are very likely to get passed. So I would look at this and say, even though this typically is a reliable trend indicator, the golden cross and the death cross, we are at a point in time right now where there's a couple elements that come into play. There are unusual circumstances that could very well shift that whole standard of what we see, what happens with trend patterns. So overall, I'm still quite optimistic on this. I would love to know what you guys think about this down in the comments below. And that's what I got for you in this video. Thank you so much. Again, if you can, go check me out on TikTok, Crypto Atlas on TikTok, as well as AI.crossover. You can find the link to that one down in the description below. Thank you so much to my Patreon supporters. Double shout out thank you to We Love, Victor Vegas, Osmoon X for being higher level patrons. And thank you to my YouTube members. I appreciate you guys so much. God bless. We'll see you in the next episode.